All right, what's going on, guys? It's Tuesday. We just came back from a long 3-day weekend after the MLK Day. So basically, we came back to a stupid market kind of thing. Crypto market is down, stocks market is down, bonds market is kind of down because the yield is up. And yeah, basically everything is going down. We might see new floor pricing for a lot of stocks as well. So I think today would be quite interesting for us to really look at. But without further ado, let's cover some news today. So before we actually go into the news, I feel that we need to start looking at something like this. First of all, for people who are unaware, this is the 10-year Treasury yield, and we actually went all the way up to the 1.85%. If I'm not mistaken, the last time we actually hit 1.85% was years ago. It wasn't even pandemic time. I think it was quite long ago when we actually hit this 1.85 high. I think maybe peak pandemic where people actually do not know what to do with their money and people basically just stash money into bonds. But I'm not very sure why bonds went up so high. I'm almost certain that it's because of rate hikes, and also because Xi Jinping, the president of China, came out to talk about the possible rate hikes globally. Okay, so let's look at Wall Street Journal first, where they actually talk about bond yield hitting 2-year high as stock futures fall. So this is kind of like the chicken or egg comes first. Will the tech lose the profits first, or will bonds go up first? We do not know what usually comes first, but whenever one happens, the other will eventually happen. Whenever we say that bonds yields go up, basically it means that the prices of bonds are going down, and because of that, tech sell off. Okay, but usually we don't know what happens first, and that just kind of happens simultaneously in the markets. So that's the first thing. I'm almost certain that we saw, I saw, about um, China's Xi Jinping talking about the global market shortages. Oh, hold on. I think it was on Barron's. Hold on. My Barron's hasn't been working well recently. Okay, let's find. Yep, there it is. I read this earlier on my way back to work, back from work. Xi Jinping urged the world's major economics not to rapidly raise interest rate at the virtual Davos summit, warning such action could threaten global recovery. So for people who are unaware, we are expecting at least 3 rate hikes for the US this year in 2022. However, Goldman Sachs analysts did predict for 4 rate hikes. Right now, we're actually on track to see 5 rate hikes, because right now, if we continuously see this kind of level of supply chain issues, manpower shortages, inflationary trend upwards, we need to kind of increase the speed of the rates hike in order for us to actually match up. Hopefully to bring inflation down by 2023. I'm pretty sure a lot of countries are hoping to get rid of the hyperinflated economy by 2023. Of course, countries like Germany, like Turkey, where they are currently going through like 15% or even 20% inflation. I don't think those countries would be able to really hit it by 2023. But I think for bigger countries like your US and your China, I think they will want to get rid of this by 2023. Of course, even Jerome Powell himself said that he's not sure if we can actually get rid of like the supply chain issues by 2023. So I think that would definitely be an issue for us to really look into as well. So over here, the yield on the 10-year Treasury rose by 1.83% early Tuesday, the highest level since January 2020. Okay, so just now talk about it, which is about 2 years, which is the pandemic peak. And investor continue to assess the possibility of multiple rate increases this year, climb above 1%, blah, blah, blah. If major economics slam on the brakes or take a U-turn in the monetary policy, there will be serious negative spillover, which is why I have been talking about this as well. This was why we are so worried about the tapering coming so quickly. But at the end of the day, I think that it was actually very important for us to actually taper as quick as we can, because that way we can actually ease off the rate hikes in 2022. Because imagine if we actually took our time with the tapering and we actually finished the taper by, let's say, about, let's say, April or even May, where we actually finished the taper, then we'll suddenly get 4 rate hikes in quick succession. Means every single time we see an FOMC meeting minutes come out, it's going to be a raise of rates. Every single time it's going to be your August, September, November and December. Every single month you see, okay, rate hike, rate hike, rate hike, rate hike. And I think that's going to be even worse in the longer run. So I think this is, it's actually better for us to really increase the speed of the taper. I think in hindsight now that I actually see. So I think I did make a mistake. I'll say right now, because I thought that, having a taper going this quickly and this aggressively might actually affect us negatively as the economy. But I think that this actually make more sense. Okay, so chances of Xi getting his way are only slimmer by the day. One of the major arguments last year for inflation being transitory, a word since retired by the Federal Reserve, was a temporary energy spike. Oil prices, okay, yeah, and oil prices actually hit 7-year highs, which is crazy because of the things that we thought that we actually saw the highs of oil prices in November of 2021. And then because when December came, Omicron hit, and then everything all the oil prices started to go back down. Flights started to get delayed or postponed. People started to go back to working from home again. So basically, oil prices kind of plummet. So you can see Brent oil prices basically went all the way down during December. If I'm not mistaken, let's see if we can get the 5-day chart. Okay, actually, let's just take the whole year chart. Yeah. See, yeah. So around here, this dip down over here. Oh, hold on. Okay, so anyway, the dip down over here for the Brent oil is when you actually see Omicron coming in. So this was when Omicron came in, and then after which this sudden spike up again was kind of the recovery of everything, where people just be like, oh, okay, Omicron is not that big of an issue. The Feds basically say Omicron not that big of an issue. Fauci came out, not big of an issue. And then basically people started, okay, since that's the case, we're going to be going back into the recovery phase. And then people started to be like, okay, we need more oil, more oil, more oil. And then we started to drum all the way back up to the $86 mark. So earlier in October, before Omicron came out, we actually hit $85 highs. And I remember that happening, and I actually covered the news about it. Sadly, I do not have the archive for it because it was on Instagram instead of YouTube, which is why I'm happy I'm doing this on YouTube, so I can actually kind of throw back on the YouTube platform instead. But anyway, over here you can see it's going all the way up to even $87 now. And the last time we actually saw this highs was 2014, I guess 2014, a very long time ago. Yeah, so basically, oil prices are going up as well, and that's kind of crazy. And yeah, I think that this is most probably because, okay, actually, Wall Street Journal did have a interesting article for it, which is rising geopolitical tensions, which is why crude prices are actually going up. A milestone in a rally that's gathering momentum as geopolitical tension threatened to knock supply. And I think that this is actually more towards the whole Russian and the UAE, because I feel that they are currently trying to maybe bottleneck some of the supply to some of the countries as well. So I think this is more of a political fight. I do not want to get into the political stuff because I think political division on YouTube is kind of lame. I kind of don't want to take part of it, especially when I think I'm not going to be partaking in any of that. So I don't really care about them. But yeah, okay. Some lawmaker push to ban stock trading by colleagues. Okay, I'm pretty sure that they are talking about the Congress one, ain't it? Yeah, okay. Yeah, the members of Congress from buying and selling stocks. So I talked about this last week, I would assume. So Jerome Powell actually talked about this, where people are now in the Congress. Usually they are given up to 45 days for them to actually report the stocks that they actually purchased. And it's kind of weird because the things that they are actually given a penalty if they actually take longer than 45 days. So every single day of a penalty is going to be $2,000. Yeah. They are dealing with millions of dollars of gains, but if they are a day late, it's going to be a $2,000 penalty. Pretty lame. But anyway, Jerome Powell did say that he intend to change it in a sense where it's going to be where now you are basically not going to be this all-seeing, omnipotent kind of Congress goddess, aka Nancy Pelosi. You're gonna be saying that, you know, if I'm interested in Apple, I'm gonna buy Apple in 45 days. So I'm gonna lock it in with whoever's in charge with the stocks buying in the Congress. And then basically you say, okay, in 45 days, I am going to be buying, let's say, 500 shares of Apple, and then that's going to be done. So in 45 days, you are going to be buying Apple at whatever price it is, according to the amount of stocks that you're going to have. That's according to Jerome Powell. Of course, none of this is basically in black and white other than the minutes from the renomination hearing. So we do not know what actually is the actual thing that's going to be going on. So let's see when it's actually out in the law, then we'll know. Lawmakers are not an average participant in the free market economy. Free market economy, let's be honest. Nancy Pelosi loves to use that. She keeps saying that it's a free market economy, but it's not a fair market economy. But I think I think I rambled long enough about the whole Nancy Pelosi trading the stocks market. But yeah. Basically, yeah, nothing much. Basically, okay, over here they're just saying that what are the stocks that are mainly purchased by the Congress, which, okay, honestly speaking, just for me to be like on the fence about this, I do want to be a little bit more neutral than like against the Congress, because a lot of time they do buy into big companies. So for example, in the chart over here, I'm not sure if you saw, they actually do Microsoft, Alphabet, Apple, Netflix, Amazon. Okay, these are like big cap companies. If, for example, they suddenly started buying like 20 billion market cap companies or $500 million market cap companies, and then it suddenly skyrocket, then fair enough. I would say that that's straight up insider trading. But what they're actually doing is very, very close to ETF trading, which is fund trading. And I don't want to say that it is not wrong, nor is it not correct. I feel that it's all right, because it's just that because they're actually stock picking rather than buying into the funds directly. So, you know, there's definitely going to be some sort of chatter around that. But yeah, okay. Let's see. Do we have anything on CNBC? Yeah, okay. CNBC. Walmart quietly preparing to enter the metaverse. What the? Okay, this is going to be interesting. Walmart appears to be venturing into the metaverse with plans to create its own cryptocurrency and collection of NFTs. Okay, that's cool, I guess. And people say that it's not a bubble. Let's be honest here. It's intent to make and sell virtual goods, including electronics, home decoration, toys, sporting goods, and personal care products. In a separate filing, the company said it would offer users a virtual currency as well as NFT, according to U.S. Patent and Trademark Office. Walmart filed the application on December the 30th. Blah, blah, blah. Okay, so 7 applications submitted. Exploring. Yeah, okay. So basically, they're just exploring the NFT space. I think this is gonna be interesting. Because yeah, Nike. Yeah, I was actually just gonna be talking about Nike, because Nike also went ahead and did an NFT. I'm pretty sure Under Armour did the same thing. And because of that, they kind of gotten quite hype over it, especially with the entire whole sneaker craze in the 2019s and 2020s. And because of that, I think that when Nike actually went towards the NFT route, I think a lot of people actually went crazy for that. Gap. Okay, I didn't know Gap did NFT. That's cool. Yeah, Under Armour and Adidas. Yeah, I knew about that. But yeah, you know, this is quite interesting. I have a feeling. Okay, if you have not watched the video that I've talked about, which was the video that I uploaded yesterday, which was basically talking about, are we actually that close to the metaverse, where Web3 actually coming this soon, as well? We are all expecting Web3 to be. I feel that, you know, Web3 is not something that will be coming so soon. But and also I did touch a little bit about how NFT is being this sort of like bubble like asset class. But I think that when I actually talk about it in the video, I actually said something along the side of like how NFT projects, basically 98% of them are gonna fail, but the ones who are actually gonna succeed are the one with the actual conceptualized concepts. For example, like in Walmart, in Nike, and things like that. I'm not sure how Walmart is gonna do it, but if they actually do it properly, I feel that they can definitely bring some sort of value into this. And also, of course, because they have big money, so when you have big money, most of the time I'm going to trust it. Okay. Let's see. Omicron surge shows signs of easing in states hit early by the fast spreading variant. I think this pointless. Yeah. Okay. The oil hit 7-year high. Yeah. Okay. I think that's basically it. I don't see something that is like horribly bad or anything. Okay. Yeah. That's kind of lame. Let's see if Bloomberg have anything before we stop this. Okay, drone strikes on UAE. I kind of want to talk about that, like I said before. Yeah, okay, mostly political stuff. I'm still gonna be reading up on it. I still want to have like my own view on the political stuff. It's just that I don't want to be portraying my own my political stance on it, because I don't want to cause any sort of political division amongst other people. And yeah, no, I kind of want to put that out in the net anyway. But yeah, anyway, I think that's all we have for today. Right now it's about 8:30. So maybe you guys will see this by 9. But yeah, anyway, I have to go and shower, and I have to go and read up on the market again. But anyway, thank you guys for watching, and I'll see you guys tomorrow.